Petronas posted a 29% drop in profit after tax for the second quarter of FY 2023 to 16.4 billion ringgit, as average realised prices for oil products fell amid lower crude oil prices, which are down 26% year-on-year. Quarterly revenue shrank 13% to 79.9 billion ringgit. Petronas Chief Financial Officer Liza Mustafa said the performance was in line with the results of other oil and gas majors, which in recent quarters saw weaker earnings compared to the bumper year in 2022, tracking the normalization of crude oil prices. For the first half of FY 2023, Petronas logged a 13% drop in profit after tax to 40.2 billion ringgit, while revenue was little changed at 170.3 billion versus 170.4 billion in the previous corresponding period. Petronas President and Group CEO Tan Sri Tengku Muhammad Taufik said this bearish environment is expected to continue, with oil and gas prices expected to remain volatile with persistent economic headwinds and energy security concerns firmly on the horizon. Maybank expects its net interest margin, or NIM, to decline by 25 basis points year-on-year for FY 2023, primarily due to competition in funding and deposits. Speaking at a press conference, Maybank Group President and CEO Datuk Khairul Saleh Ramli said the group has already recorded a steep NIM compression decline of 23 basis points to 2.16% in the first half of FY 2023, compared to 2.39% in FY 2022. The lending group expects NIM to then stabilise, forecasting a compression of up to 25 basis points for the whole of FY 2023. Maybank announced its second quarter FY 2023 financial results today. Quarterly net profit rose 45% to 2.34 billion ringgit, led by higher non-interest income from stronger treasury and markets income. Revenue jumped 57% from a year earlier to 16.13 billion ringgit. Maybank declared a dividend of 29 cents per share. For the cumulative 6 months, earnings came in 26% higher at 4.60 billion ringgit on revenue of 31.32 billion ringgit, up 47%. At the close, Maybank's shares were 0.2% higher at 9 ringgit 11 cents for a market value of 109.8 billion ringgit. CIMB Group Holdings said second quarter FY 2023 net profit rose 39% to 1.77 billion ringgit, driven by strong operating income growth, stringent cost controls and lowered provisions, as the group benefits from its diversified ASEAN portfolio with strong business growth recorded in Indonesia and Singapore. Quarterly revenue increased by 9% to 5.33 billion ringgit. It declared the first interim dividend of 17.56 cents per share. For the cumulative 6 months of FY 2023, net profit rose 26% to 3.42 billion ringgit, while its top line was up 7% to 10.33 billion ringgit. Going into the second half, Group CEO Dato' Abdul Rahman Ahmad said the lender is taking a cautious position amid global headwinds. Still, CIMB expects the ASEAN markets to remain resilient, supported by the regional countries' economic policies and strong demand for tourism and services, and is optimistic on continuing the momentum of positive financial performance. At closing bell, CIMB's shares were unchanged at 5 ringgit 63 for a market capitalisation of 60.05 billion ringgit. The Court of Appeal allowed an appeal by National Feedlot Corporation and 4 others against Public Bank, ruling the lender is liable to pay damages to them over alleged breach of contract in protecting information concerning their bank accounts. The bench ruled that the High Court judge ignored vital evidence from the bank's domestic inquiry on its former clerk Johari Mohammed, who was implicated in the leak of confidential documents. Judge Dato' S. Nantabalan pointed out that it was Johari who had wrongfully handed over the financial statements of the plaintiff's accounts to third parties, and these eventually found their way into the hands of politician Muhammad Rafizi Ramli, who then publicly disclosed the information. The court overturned the High Court's decision, granted nominal damages of 10,000 ringgit with 5% interest from May 22, 2012, the suit's filing date, and directed Public Bank to pay 500,000 ringgit as costs. Malaysia Aviation Group or MAG and Brahim's holdings are ending their decades-old in-flight catering partnership following a thorough and prolonged negotiation period. The parent company of Malaysia Airlines said it had received a formal notice terminating the partnership on June 30th, but Brahim's subsequently agreed to a 2-month extension ending August 31st. MAG said it will continue to explore diverse strategies to ensure business sustainability, which include partnering with reputable food and beverage providers, sharing a commitment to premium passenger experiences and efficient in-flight services at Kuala Lumpur International Airport Terminal 1. In the meantime, the group said Malaysia Airlines will resort to self-catering on selected routes from September 1st, involving the sourcing of pre-packed meal items and F&B supplies from multiple providers, including its lounge operator MAS Awana. The remainder will continue to be served by Post Aviation.